Nigeria's Debt Management Office reopened its 10-year, 15-year, and 25-year bond tenors, offering 150 billion naira in its February bond auction today. Ifeoma Onyejekwe, a fixed income trader at UBA, joins me now to assess the appetite from investors. Thank you so much for your time today, Ifeoma. Let's look at how investors are lapping up the bonds today.
Which would be released by the end of the day. But we have seen very, very high demand for it. In the secondary market, trading has been very lax as people expect higher yields at the bond auction. So we're just waiting for the results to come out, and we expect the DMO to hike their rates too.
All right, Ifeoma, let's get into the bond auction and what are we seeing from investors today?
Investors have been very excited because throughout this week, trading has been very slow. We've seen some sell-offs and decline in yields as they try to sell off their positions because the expectation is for the DMO to increase rates. In their meeting with stakeholders last week, they outlined their plans to increase borrowing. And so with pressure on DMO, people have been expecting increase in rates even up to 10%. So we've seen increased bids at the auction today, and we expect the DMO to fall in line just with market expectations.
All right, we're seeing inflation at 16.47% for the month of January. What implications are we going to see play out for the markets going forward with yields?
Following the increase in inflation, a 45-month high, that affected yields yesterday as we saw a decline in yields. People have been rushing off to sell off their low-yielding portfolio in order to reinvest in high ones at the auctions. So we expect an increase in yields as the trading month goes on in reaction to this rise in inflation.
All right, but what do you anticipate will be the DMO's response to the elevated yield environment?
Sorry, could you repeat that question?
I said, what do you anticipate will be the DMO's, the Debt Management Office's reaction to the elevated yield environment?
Oh, yes, like I said previously, they had a meeting with stakeholders last week, and they outlined plans to to issue another secret bond, as well as green bonds and other social impact bonds. So in reaction to the inflation and also with the fact that they do need to borrow more, I believe that yields and rates would increase in coming months.
All right, now let's look at the liquidity situation in the market, and I'd like to get what your near-term outlook for liquidity is in the market.
The liquidity in the market has been really poor. Yesterday was just about 200 billion, irrespective of the over maturities we saw yesterday. So we've seen overnight and OBD rates increase in the money market. We don't expect any other inflows to end this week. So we expect a further hike in rates at OBD and overnight rates, and also we'll likely see some very sentiment to end the week as market players sell off some of their positions to fund their liquidity gap.
All right, we're seeing oil prices go as high as $64 today, and I'd like you to speak to the likely implications we could see play out in the market, especially with Nigeria's FX reserves.
Sorry, could you repeat that? I didn't hear you very well.
Yeah, I said we're seeing oil prices reach about $64 today in the market, and I'd like to understand the wider implications for Nigeria's fixed income market and what it means for Nigeria's FX reserves.
Well, it's a good thing that the oil prices are rising, but you still remember that we are in a COVID-19 pandemic, so economic activity has not improved as much as expected, even with the lifting of the lockdowns. So I don't think the oil prices will have much effect on the fixed income prices as well as our reserves, since our economic situation is still in a gap state.
All right, and thank you so much for your time today on the show. Ifeoma Onyejekwe is a fixed income trader at UBA.